Sometimes people look at risk in really very different ways, and I think your brother getting laid off sort of illustrates some of the risk that goes along with the sort of traditional job path, and just looking at this like, oh, okay, how am I gonna, make a better life for my family?
Me and my brother, we lived frugally. We made a decent amount of money, but we kind of kept our lifestyle the same. So we started accumulating savings, and then we just used the savings from that first business to buy business number two.
Did you stay in the flooring industry, or did you kind of branch out across different industries? How did you look at it from that perspective?
Kind of both. We bought almost two companies back to back. One was in flooring, one was in home services, as well as a lighting store that did lighting, hardware, sconces, chandeliers, etc. And then we also ventured into oil and gas services as well.
How long did you... Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Paul Lajoie. Paul has bought and sold over 20 businesses. He's a board member, a CPA, and a best-selling author on small business acquisition. What sets him apart is his focus on helping ordinary people break out of a corporate burnout and step into financial independence by acquiring and scaling their own businesses. So Paul, like I said, I'm gonna let you tell the story because I think it'll be much more interesting that way. But first, thanks for coming on the show today. Thanks for joining me and taking your time. So I really do appreciate it, and I'm looking forward to the conversation.
Awesome, Jason. Thanks for having me.
Absolutely. Well, let's start with your story. Tell us a little bit about your background. I'm sure you didn't start at 20 businesses, so let's wind back the clock a little bit and hear some more about it.
Exactly. All right. So real quick, just kind of background, kind of coming out of college, accounting, finance degree, went into the world of public accounting way back when there was 6 big public accounting firms, worked at Cooperson Lybrand in the audit department for about 2 or 3 years, transitioned into corporate world in the same kind of roles, accounting, finance sort of stuff for about another 8 or 10, got married, had a kid, getting ready to have a second kid. And we started, and we wanted the wife to stay home with the second kid at that point. So we needed to replace her income. So we originally started looking for a little tiny business that she could run part-time for a few hours a day, that sort of stuff. And then about that time, my brother Bob got laid off a company called Fast Tax. He was in charge of their entire IT department. He'd been there 20 some odd years. Got a large severance, and then we ended up pulling our money, buying a much bigger business than what we were originally looking for. And not only did it replace my wife's income, it replaced my income as well.
Wow.
After about 6 months. So I stayed in my W-2 job for about another 6. And then I transitioned into this first company, and my wife ended up not working at all. So I kind of rolled into that full-time gig with my brother, Bob. And that first company was a hardwood floor company, carpet, tile, hardwoods, that sort of stuff. Did a bunch of remodels, but did a lot of new construction as well. And actually still own that company today. So that was my first one, my baby, and I still own it. So kind of an interesting story without a doubt.
Yeah, no, that's it's interesting that you came to that from a place of a growing family. I think sometimes people look at risk in really very different ways. And I think your brother getting laid off sort of illustrates some of the risk that goes along with the sort of traditional job path, and just looking at this like, oh, okay, how am I gonna, make a better life for my family? And in this case, it was, let's go out and buy a business. So the flooring company, is it's a great business, a great start. When you did that initially, how long did you take from acquiring that first business to start to think, oh, maybe we should get some more, we should kind of continue this path? How did that transition go from, oh, I just want to replace my wife's income, to I'm going to keep doing this, keep acquiring businesses?
I think it started coming into back in our minds probably within 2 to 3 years.
Okay.
And me and my brother, we lived frugally. We made a decent amount of money, but we kind of kept our lifestyle the same. So we started accumulating savings, and then we just used the savings from that first business to buy business number two.
Yeah. did you stay in the flooring industry, or did you kind of branch out across different industries? How did you look at it from that perspective?
Um, Kind of both. We bought almost two companies back to back. One was in flooring, one was in home services, as well as a lighting store
Hmm.
that did lighting, hardware, sconces, chandeliers, etc. And then we also ventured into oil and gas services as well, just from a diversification standpoint. We wanted just not everything, all of our eggs in that home service space, even though I still love that space today, but it is kind of nice to be diversified as well.
Hmm. Yeah. Did, I guess maybe better way to ask it is did you have a strategy around it? How did you decide, okay, I'm going to buy this flooring business, and then, okay, I'm going to, move to oil and gas. I understand the diversity play, but I also feel like this in my own experience, sometimes it's like, well, this is what's available. This is a good deal. I just want to make things happen. Like, how did you approach that? Because I don't know. I feel like sometimes you'll have very differing opinions of what's the right way to do things. I don't really think there's a single right way. So I'm always curious to hear like how you looked at it as you progressed through that journey.
Well, Jason, I'd love to tell you that I had an intelligent plan back then, but I didn't. it was definitely winging it,
Yeah.
without a doubt. So, and what's interesting too is back to actually my hat that I'm wearing today is very, very timely in that because I do consultation in this space, and there's never a time that's right.
Right.
Right. I just had my second kid. I'm worried about the next administration that's coming in. I think there's a recession coming up, and I got to save for this. And oh, my dad just got sick, and this. There's never a good time to make a massive change in your life, ever. But there is a bunch of excuses you can make why you don't take that decision, right?
Yeah.
But to circle back to your question, there was, did I have a whole plan on this? No, and I thought that worked in my best interest because I didn't know about all the things I didn't know about, if that makes sense.
Yeah.
Where if I knew that there was 10,000 things I needed to learn and like, oh my God, do this and this and this and this, oh, get the main person under an employment contract or they're going to leave. And I didn't know all that stuff. I just kind of went in and didn't overanalyze it. And thank God I didn't know as much as I know now, because maybe I wouldn't have made that jump.
Yeah. Yeah.
Right. Now that I know everything, I feel like I'm a little bit overcautious now than what I should be, because I know about the 10,000 things that can go wrong, but I also know about the 20,000 things that can go right as well.
Right.
Right.
Yeah.
So, yeah, without a doubt. Obviously, I have a game plan now, but it took me really about 10 years to really figure it all out.
Yeah.
All the mistakes, the dozens, if not hundreds of mistakes that cost me hundreds of thousands of dollars, if not millions of dollars, on the things that I didn't do properly. And from it being a CPA too, the tax stuff that I didn't really get my arms around probably for 5 to 10 years, that now I just like, I probably save hundreds of thousands of dollars a year, every single year, just because I know how to set up everything from a taxability standpoint.
Yeah.
That I didn't know before.
Certainly, I mean, you are going to learn. It's interesting. You could almost argue both sides here. It's like there's a lot of. I mean, you coach people. There's a lot of noise on social media about you should buy businesses and this is how you should do it, and there's mentorship programs and all that stuff, which is great. Hopefully, helping to save people some of the maybe time and money that comes with mistakes. But at the same time, I wonder if, in a way, to your point, it's stopping people from taking the next step, because there are, now all these different things that can happen. And you're like, well, I'm looking at this deal. Here's, customer concentration, or there's, so all of the things that people list down is like, don't buy this business. It's too big. It's too small. You can't get the right debt. There's all kinds of, but at the same time, I do think there's something to be said for getting started in taking that first step, like you did, and kind of figuring out some along the way. And the nice thing about businesses is generally, you're buying them. The one maybe one rule you should stick to is buying them with inherent cash flow. And so you've got something there already, and it's not based on speculation or what's going to happen in the market or all of that. It's like literally like if everything stayed exactly the same, I still have money coming in through this business. And so it's I guess an interesting question. I'd love to hear your take, since you do coach people. Like, where do you draw that line of, oh well, you're never going to eliminate all the risks. And so how do you suggest people approach that when they're trying to get started? I think once you've already built that portfolio of businesses or whatever, once you have assets, you get a little bit more in a protection mode than in the beginning. But I think the mindset changes over time. So how do you kind of coach people when you're talking about that?
That is good. That if you almost try to teach them too much and almost kind of scare them a little bit, then maybe they may not pull the trigger. But I throw everything on the table. Hey, this is the 50 things that can go wrong, but I'm going to prepare you for all 50 of those.
Yeah.
Right. So they don't kind of just come up and kick you in the rear end without you knowing about it. Mm-hmm. So if you're prepared for it. So for example, I kind of mentioned it a second ago and I just kind of glossed over it, is the company you're buying. Let's say let's not even talk about the seller, right? Let's just say there's two main managers, right? And oh my God, super scary. What if those managers left? Valid point. Well, we're going to work through that we're going to have conversations with those managers, and I'm going to get them under employment contracts before I even buy the company. Right. So now I just brought up something super scary, that the two main guys may just leave. Well, no, now they won't. Mm-hmm. Right. So does that make sense? So, the seller's heavily involved. So I'm taking over and they're going to leave. Well, how do I work through that? Well, okay, let's talk about that. Well, can we get the seller to stay on and be a part-time salesperson for 2 years and pay him $50,000 a year? So now I brought up a problem and we just worked it out. Right. Does that make sense? So throwing out everything on the table, and then you got to make sure you prepare for it is the way to overcome that.
Yeah. I love that. I love that. I mean, yes, there are always challenges, but with the experience that you have now, you've developed a lot of the solutions to those challenges. You're much less likely to be surprised at this point. So when you're talking to people that are getting started, you can have these are the things you'll worry about, or these are the things you'll come across. But look, like, I've already faced it. Many people have already faced it. This is what you do to kind of, address that in advance if you can, but also like I think one of the biggest things I've come to find in terms of business ownership and stuff like that, like there's always problems. That's kind of the idea of being a business owner or an entrepreneur, is figuring out what to do when the problems arise. Because otherwise, if someone else is taking care of the problems, you're effectively probably just an employee in a way. At that point, you're just kind of riding along, in your seat on the bus. So having the guidance of someone who's kind of been through all that will help, I think, shorten some of the learning curve and really make some of the scary stuff go away. I want to ask you, I'm sure people have these questions. You mentioned the tax side of this, which I think is an interesting, I don't know that it's a problem in a way, but it's one of those things where you see a lot of business owners do a lot with their business to avoid having to pay taxes, right? But they're also then, in a way, like avoiding some of the benefits of owning that business and not really preparing themselves for sale, because sale would be based on the earnings. And so if all your earnings are going away because you're trying to avoid taxes, I feel like that's like a chicken and an egg sort of situation that maybe sounds like you figured out some solutions. I was hoping you'd at least share one or two of those for people thinking along those lines.
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Yeah, I mean, most of the companies you're looking at are going to be pass-through entities. So the tax planning that you're doing, or from an individual standpoint, it should not affect the valuation of your business.
Okay.
Especially, I mean, if amortization and depreciation and depletion or whatever, any of those soft costs show up on your P&Ls, those are easy add backs, right? From that level standpoint. But the things you do on your individual tax return as a pass-through entity shouldn't really affect anything. Now, the one things that do affect people is all the owner add backs and taking money underneath the table and things like that. Like I just took a $40,000 vacation with my family and I just wrote it off on my corporate returns. You know, doing stuff like that, it's going to bite you in the butt. First off, that's highly illegal. So don't do that.
Yeah, right.
Let's throw that out there. I don't want anybody, IRS agents coming after us.
That was not a suggestion. Anybody listening to
exactly.
Put your $40,000.
Yeah, exactly. I should have put the wrong name up there. But those things will bite you in the rear end. But I always say for people that are getting ready to sell, I need 3 years.
Okay.
I need 3 years. And then you can clean that stuff up, because they look at 3 years of P&Ls, 3 years of balance sheets, and 3 years of tax returns. And if you're taking all this stuff underneath the table and all these owner add backs and all this sort of stuff, and you ran through your kitchen remodel and stuff like that, well, quit doing that for the last 3 years.
Right.
Okay. Make sure everything is clean. So from that standpoint, yes, without a doubt, people trying to minimize their taxations and not planning for the future sell is definitely problematic.
Mm-hmm. Yeah. It's a good problem to have. The cash flow is a good problem to have. Are there strategies for people? I mean, this is going to sound maybe like a ridiculous question to have because it's such a good problem to have, but like, are there strategies for business owners that find themselves with cash surpluses? Essentially, you know, whether it's tax deferment or avoidance, or just other strategies that you use to help, I guess, manage that. It sounds silly to call it a problem, but it is something that comes up with successful businesses. It's like, oh, we're doing well. We've got cash coming in. Like, what do we do to help, again, looking toward the future, help ourselves and not just have it either sitting in a, bank that's hardly making any interest or something like that? Do you as a CPA and business owner yourself, how do you look at that particular aspect?
Well, that is a good problem to have, that I made a crap load of money and I'm going to have to pay $300,000 in taxes. That is a good problem.
Yep.
But without a doubt, how to minimize that is by business number 2 and by business number 3 and business number 4 and business number 5. And those are all asset sales, right? So let's say I'm buying another flooring company for $1 million and they have $200,000 of depreciable assets, right? And as an asset purchase, even though those are fully depreciated, I get to redepreciate them on my purchase. And right now we have special depreciation at 100%. So now I get to write off all 200,000 of that against all of my income. So business number 1, I made 200 grand. Well, business number 2 I just bought, I got a $200,000 write-off. So I make zero money, right? From a taxability standpoint, I'm putting a lot of money in my pocket, right?
Yep.
I own pieces of real estate. I own 4 pieces of real estate too. So I love diversification. I don't love real estate near as much as I used to. I think that's kind of topped out from a value perspective. Still a good diversification, but not a get rich situation like it was over the last 15 years. I still love it. So I still own 4 pieces of commercial real estate that I'm depreciating over time. And then, golly, any businesses that you buy, any Goodwill or Blue Sky or whatever you want to call it, that gets amortized over 15 years. So you're amortizing all sorts of that stuff. And then there's special plays that you can make that are kind of sophisticated tax stuff. You got kids and put them on your board and pay them a salary and the vacations you can talk about, they can be board meetings, so you can write off those vacations. So there's definitely some sophisticated plays.
Yep.
that you can get into. I wouldn't worry about the let's call them phase two tax situations, probably for a year or two. Get your feet wet and worry about running the business, and then talk to your CPA about some more sophisticated plays, without a doubt.
Uh, Thank you for that. I think one thing that's kind of showing up over and over again in this conversation is the time horizon that you're viewing things in the sense that you're talking in years, or you said it took 10 years before you felt like you had to figure it out. And so I think, and real estate's the same. It's like none of this stuff is really meant to, it's not winning the lottery. It's a lot of hard work, and but you're accumulating assets. And you said that in response to what do I do with the extra money? It's not, go buy a new car or new boat or things like those things can come along too. But at the end of the day, building for the future means, okay, I'm going to start to put this cash that my successful business is making into additional assets that are, diversification is great. You can go through whatever asset classes you like. But I think ultimately the point being, like, you do want to look at this as I'm doing this for a decade or 2 decades or 3 decades, sort of depending on how old you are when you start this journey. But ultimately it really is a long-term play for the most part. With that in mind, when you acquire businesses, are you looking, you said you still own the flooring company. Is that your strategy in general, sort of long-term holds? Or are you turning some of these around and selling them? Or again, is this a, take it as it comes, whatever the best option is?
I would say take it as it comes, with understanding that 90% of the ones I'm buying for a long-term hold. I'm never buying for, I'm going to buy this and then flip it in 2 years. No. Never do that. And with a turnaround situation, it's going to take up too much of my time. I'm being pulled too many different directions. So I don't have time to do something like that. So they're always long-term holds. Yeah. At least for me. And I do like the diversification as well. Because somebody asked me this question the other day, which I thought was a great question. Would you rather buy one company and spend all your time trying to scale it? Or would you rather buy business number 2 or business number 3? And all day long, it's business number 2 and business number 3, right? Mm-hmm. But with that said, there's nothing wrong with buying business number 1 and scaling it, right? Which is why I love small business compared to any other investment you have, right? I buy a piece of real estate, you can't scale it. Right. There's some value adds you can do without a doubt, a remodel and things like that. But those are few and far between, especially now. But you buy an HVAC company that's doing $5 million a year in revenue. Why can't that be 20 million in 5 years? Because it can. Yeah. Right. So for scaling it's good too.
Yeah. Well, yeah. And I guess that just says it's not or, it's and, right? We can, would you rather scale or acquire more? And it's sort of growth, both organically and through acquisition, are effective strategies. And if you put them together, you're kind of the sky's the limit. I think in maybe that's some of the theory around why some people advocate for staying in one vertical. Like, you buy an HVAC company, I'm going to buy more HVAC companies to add to that. But then, as you said, diversification is important. So if you're doing that, well, all of your assets are in HVAC, and HVAC's not likely to be replaced by AI, but things happen. And so if you have diversification where, one particular business or asset does well in some type of market, and then you've got other types of assets that do better in the opposite type of market. It's just, there's a lot of reason for that diversification. And I think I really feel like I kind of mirror the way you look at it. Is like, let's be opportunistic. Like, this is a great business. Let's do that. And then let's get some more great assets to go along with that, that one. And however that works out, I think that probably has some point of diminishing returns. You don't want to get too far apart in assets. Maybe, I don't know. I guess it depends on the team you have, but your approach makes a lot of sense with me. It resonates. Where do you where do you see yourself going, your own strategy going over the next, decade from here? Just continue the same? You see any patterns developing?
The same, but probably at a 10x what I'm doing. So I started this small business acquisition consultancy company 2 or 3 years ago. I've been doing some one-on-ones here or there over the last 5 or 10 years, but then I just felt like I needed to do something for the masses instead of just helping one-offs here or there. That I created this community, Biz by Pro. So along with that, I'm going to try to educate a whole bunch of people, and I would love them to invest in my deals, or better yet, me invest in their deals. So they go find the HVAC company for $2 million, and then they go get the SBA note, and I'm just going to do a consultancy for equity. So business number one, we talked about how scary it is and all the things you don't know. So all of a sudden now you got me as a partner to help you through everything, right? So doing that, or even, okay, let's say that you come into my community, I like you a whole bunch, but you don't have any money. So then I'll put up the down payment for you, and take a preferred interest rate and a larger piece of the equity, right? If I'm putting up 10% down payment, I'll take 20% equity in your company, but you still own 80 and you still run it and operate it. So I'm trying to do that for 500 people in the next 10 years.
Oh, well, okay.
You come to my community, I teach you how to do all this sort of stuff, and I hold your hand. And it's just me. When I say a community, it's me. I don't throw you off to any analyst or anything like that. You get my 25 years of experience. I have conversations with you one-to-one. You find a deal, you send it to me. I'm going to help you value it. I'm going to help you term it out and all that sort of stuff. I'm not going to do any of it for you, but I'm going to help you without a doubt. So that's kind of that gets me up in the morning. And I kind of felt like I'm at a point in my life that I've created, I think, generational wealth already, where my 5 kids never have to work again a day in their life. So I want to try to do that same thing over the next 10 years for as many people as I possibly can.
Fantastic. It sounds like the one-on-one, I've been a part of a number of different mentorship groups and things like that. And I think the one-on-one mentoring is always better. It's just always, it's great. You can get the group teachings and things like that, but having access to the person who's actually running that community is, of tremendous value. So I think, and then having you as a potential, advisor, board member, whatever name you want to put on it, I think is also extremely helpful to people. So that's a great service to offer. And I think actually a very good kind of transition on to the questions I ask every guest. And the first one is always, what is your why? And I think you sort of talked a little bit about it there in terms of wanting to help people. So I just wanted to give you the chance to expand on that if you have anything else to add. But basically, the name of the show is Know Your Why. So I always like to find out, whatever.
Yeah, I mean, I would say my why is two things, and it can be simultaneously too. It's my children, right? It's my 5 kids, and just helping them throughout life and making sure they're prepared after I'm gone in every possible way, not just financially, but from a family perspective and religion and all that sort of stuff. And then secondly, it's just, man, as we kind of talked about AI and what that's going to look like in 5 years or 10 years or 20 years is super scary. So, and I think one way to get around that is buying a small business that won't be affected. The home services, light manufacturing, I mean, you just name it. Let's think about different owning a car wash or a laundromat, things like that, where AI is not going to touch it, right? So Don't wait until you get laid off. Be preemptive.
Yeah.
And move before that, without a doubt. So those are definitely my 2 whys, and just look, I just wanted to set up as many people as I possibly can to set up their family for generational wealth to come.
Yeah. Amazing. Paul, this has been great. When people hear this and they want to connect with you, what's the best way for them to reach out?
Email me, Paul@bizbypro.com, BIZBUYPRO. Paul@bizbypro.com is the easiest way, and I'm going to respond to you directly.
Perfect.
So most likely, if you're interested in me helping you, or just a question, I don't care. You don't got to join my community. I'll answer their emails or even phone calls too.
Okay, fantastic. We'll have that in the show notes so people can find you easily. Well, Paul, thanks for coming on the show. I think this is a really valuable space for people to be in and have someone to go to as a potential mentor and join your community and have that same potential life-altering experience and path that you've developed. So thank you for being here. Thank you for sharing everything that you did. I really do appreciate it.
Sure. Appreciate it, Jason.
Folks listening, make sure you connect with Paul. We'll have that email in the show notes. Please like, rate, and review the show so we can continue to get great guests. And as always, thank you so much for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?